I think it's going to be really hard to walk back the quarter-point cut that everyone's expecting in 21 days from now. The thing that's fascinating to me is that we've had a significant change of plans since last Friday's NFP numbers. And to me, it seems like the market is relatively complacent going into his speech today. There is a very significant risk that he makes an attempt to walk it back, and I don't think the market's pricing that in effectively. That being said, I don't think he will. I think he's going to give us what we need. I think he has to at this point in time. But what happens beyond then is going to be interesting. Because remember, one of the key elements of the stock market rally, in my mind, was the Fed's kind of flip to dovishness right around December. And I think that he's still going to say he's got our back in some way, and I think the stock market's okay. Because realistically, what else are you going to buy a German 10-year Bund at negative 0.3 yield, or are you going to buy the U.S. stock market? To me, it seems like good in a relative value.
Yeah, it's so interesting. You make a good point about when the Fed at least appeared to change course and things changed dramatically in the markets, and it was a reaction to that. Now it appears that the Fed is paying a lot of attention to what's going on globally with the slowing global growth, with the trade tensions. Here in the U.S., the economy seems pretty strong. I mean, is a 25 basis point cut appropriate at this point? We had that strong jobs report, but my goodness, that was just one report, and expectations changed so dramatically after that.
I don't think it's appropriate, but I'm not chairman of the Fed. My job is to just try to take advantage of what the situation is. I don't think it's appropriate at all. If he's going to try to make it seem appropriate, he's going to say he doesn't see much inflation and there's trade tensions. But realistically, the numbers here, everybody's been saying that there's this recession coming. And mark my words, of course there's a recession coming. There's always a recession coming. But I don't see where that's coming from. And I've been saying the same thing for several different months. That jobs number was, just a couple notches shy of blockbuster, I thought, on Friday. So is this appropriate? Well, no, but I don't think that's relevant at all, whether I think it's appropriate or not. I think it's coming, and I think the Fed is terrified of having any kind of shock in risk assets, and they've showed us that in the past. 2 years ago in August, when James Bullard came out with the case for a tightening has changed dramatically, and the only thing that had changed was an 8% move lower in the stock market.
They have this dual mandate, right? There's that whole inflation thing we're supposed to be paying attention to. But inflation
What is that again? You might have to explain that.
Exactly, right? Because we haven't really seen anything happen there. But we are going to get another reading, say, this Thursday. Is it important? Is it just no longer important because we're just not seeing it anymore?
No, it's always important. It's very important. I think there's this huge overarching theme that's gone over the last 30 years that has to do with the internet that's changed the way traditional inflation presents itself. And I think, everybody can price shop, over thousands of different retailers at any one moment with a click of a mouse. And the same thing for labor. Everything is priced differently. So I think the only time we're going to see inflation now is in bubble inflation. And we've seen it twice, in the last 20 years. And I think this whole theme, it used to be that recessions happened every 2 to 4 years. In the last 30 years, recessions happen every 9 to 10 years, but they're these huge recessions because the activist Feds come in there and they try to keep everything perfect. And in trying to keep it perfect, that's when we set us up for a big fall, which I don't think is anywhere in the next couple of years.